It is 4:02 on November 20th, 2025, and I'm going to call the Finance Advisory Committee meeting for the Hood River County School District to order. I believe we have no public comments, so we're going to move right into reports and discussions. So I'll begin with a brief capital projects update directly related to our recent long-range facilities planning committee meeting. Several of you on this call were present, including Todd Hillstad, Mark Camus, Rich Trucks, and Chrissy Wright, all part of that discussion last night. And the topics that we talked about last night involved reviewing our current enrollment figures as well as projected enrollment trends for the upcoming 10 years. So we carefully examined several reports that we had specifically commissioned with the full support of the Long Range Facilities Planning Committee. And this was done utilizing the expertise of Flow Analytics. So we did look at the information from that, and I would say it's quite similar. It was very much like the report that was presented at the board meeting held last Wednesday. Which clearly shows a trend of having declining enrollment over the coming 10 years. Again, you have a higher number of graduating classes, but as those students are leaving, our incoming kindergarten student populations are simply not the same size. And so over time, we will observe that trend continue through all the grade levels. We're already seeing this in K1, 2, 3, and it will continue to matriculate up through the grades over time. This means we're facing declining enrollment. This information was shared with our committee last night. Steve Nelson from Opsis Architecture then presented on the capacity of our schools, all of our schools that we currently have, and what our current utilization rates are. So that was quite helpful to be able to take a comprehensive look at enrollment and enrollment trends and what is our current capacity within our schools. And then the last part of that conversation last night was probably around areas of focus moving forward. As far as when we're looking at what we want to do with our long-range facilities planning, do we want to focus on like maintenance and facilities upgrades? Or secondly, do we want to focus on remodels? Or third, do we want to, really consider like doing some new buildings, new schools and that type of thing? And so we went through an exercise in order to be able to capture the thoughts and ideas from the facilities planning committee. And I would say the majority of the focus from the committee was on maintenance and facilities upgrades, but there were also, I think, some thoughtful arguments for remodel as well as new schools. And so I know we'll continue those conversations as we move forward. As we do move forward, a lot of our work is going to be taking a look at our priority list that we have for each of our schools, and really trying to identify what is it that we want to bite off if and when we do go out for a bond. So that's kind of what our focus was on last night. But Chrissy and Rich and Mark, Todd, do any of you have anything else you'd like to add, or perhaps something I might be leaving out?
No, we've got some enrollment data in this presentation, just to put it out there.
Yeah, I think you've definitely covered all the important aspects.
I think the other good thing to see was the capacity percentages they share with each school, because it really highlights where we are serving those kids,
and just for another puzzle piece.
I mean, I guess I could throw in, because Chrissy said something, so I need to also, but no, seriously,
he wasn't paying attention.
With the enrollment data, it was interesting because it also included some data from some of the other schools in the county and homeschool and different things like that, and other private schools, and it seemed like everybody's enrollment was kind of going down. It gave me the impression anyway that it's more of, families, not, perhaps not new families, new kids in the county to fill all those spaces that we've had from the past. It's like everyone's experiencing the same thing, the impression I got.
Yeah. What we're experiencing in Hood River is no different than what other school districts in the state, as well as throughout the nation, are experiencing, when it comes to birth rate declines and so forth.
So, Rich, I'm just going to piggyback on what you said and just, I guess, clarify, right? Because that was interesting for me too, right? Because I've always kind of thought that some of our loss of enrollment is that we're, bleeding kids to other alternatives in the valley. But you're saying their enrollment numbers are also declining, isn't that right? So, all the various options, all these different places, everyone's seeing a gradual decrease in their enrollment across the entire valley.
That was my main takeaway from the kind of graphic that was presented last night, or the data that was presented. And
Or at least it's stagnant, Ted. There's nothing else. The only thing I think I'd want to point out, if that's not entirely true, is the growth of online schools.
Mm-hmm.
I think that we definitely saw a little uptick in just online school, and again, that's a trend you can observe throughout the entire country.
And is that primarily for mid or high school level stuff? I wouldn't assume much online for elementary.
I can answer that. We didn't break it down that way.
Right.
Yeah, I'm presenting the document that I had shared with you all last night, Ted and everyone.
All right. So if you're able to see this on the screen, the main topic we're discussing is homeschool registration. It's a legal requirement that all students who are homeschooled must register with their local ESD. However, whether or not they actually comply with this regulation, we simply have no practical means to monitor or control that. But for those that do register with the ESD provides a report to us. So when you look at those numbers, you can see a downward shift. I will say the 2024-25 figures, though, have a double asterisk on the reasons, because the ESD last year, failed to remove students who had returned to our school district. So it was like a double count. We were counting them because they had returned, but they had not removed them from their official homeschool enrollment records. And so this year, Megan West and Katina Berg actually went student by student, and those students who had enrolled in our school district but were still on the homeschool list, they took them out. So you can see the adjustment that's been made there. So we're now down to 170 students who are currently homeschooled. And then we have the virtual charter school category. So you can clearly see that there has been a significant increase in numbers over time, moving from 51 6 years ago to now reaching 71. Horizon, we are able to consistently acquire these specific figures because they actively participate in a particular title funding initiative alongside our school district. Therefore, we regularly obtain their student and enrollment statistics each year. So we're able to show you what those are. And you can see it rose from 2021 up to last year, reaching 266. Then it's taken a dive to 211. And then you can see what our interdistrict numbers are looking like. So from the Hood River County School District, we have 6 students, and I believe they're primarily going to North Wasco. And then for interdistrict students coming into our school district, we have 30, and they're primarily from North Wasco. We have a partnership with North Wasco where we are not permitted to receive more than 30 students, you understand, but we always take it right to the maximum with them. And then for those paying tuition, we have, basically we can take up to 10 students for paid tuition, and those are primarily students from White Salmon. So you can kind of see the net out of Hood River County School District, what the numbers look like over time.
And an anecdotal comment that Jennifer Schlosser made while we were having this conversation was that she had heard the state of Oregon had one of the larger per capita percentages of student reduction in schools. And so I did some research on that last night a little bit, and it does appear that other than Hawaii, Oregon's the highest in this year that this data is looking at about 6% per year reduction in student enrollment.
Per capita. Yes, especially compared to other states.
Yeah. Ted? Yeah. I don't see the new school listed there, right? Are we just not able to get their numbers? Yeah. I actually think I can get their numbers because they do participate in, I know the new school Wildwood does not, but I know new school does participate in title funds. And so I'm gonna grab that and sort that in.
All right. That's quite interesting. Yep.
yeah, I agree. You're right, Ted.
Like this doesn't have all, there's other schools, right, in the county that, we don't have every single one on here.
Right, right. Yeah, it's the new school, it's Wildwood. Those are the two main ones. It used to be Bright Beginnings, but Bright Beginnings has closed.
Yes, yes, indeed. All right, all right. Are there any other questions from the audience? Any other questions at all? Ted, please, go right ahead with your question. Yes, Ted, you have the floor now.
Yeah, I guess since we're on it, and we're gonna, Mark has the enrollment data in the presentation today. And I guess the thing that struck me about it is it's all kind of like forward-looking data. I don't see the historical numbers, the data from the past to really understand what the trend has been like over the last 10 years. Because from my perspective, that long-term trend is far more predictive of what's going to happen in the future than just what's occurring this year. And then it's all, it's somewhat uncertain about what we'll get in the future. We do know how many kids are in K, so we kind of know how many will be in first grade, but it's hard to tell how many kids will enroll in kindergarten next year. Yeah. Yeah. So this slide was presented to the board as well as last night.
And this actually includes data from 2013 and beyond, so you'll be able to clearly see what the figures were indicating. Is that display large enough for you to view? I'd like to enlarge that image just a little bit. So regarding this, does that trend line actually represent the number of children born each year? I mean, what exactly is that red trend line showing us? Yes, it is indeed based on the number of kids per year. So from 2013 through 2020 and even into 21, we were consistently above, for the most part, with the exception of just 1 year, we stayed above 4,000. And then in 2021 and into 22, it dropped significantly to 3,871 students. And this year, I can tell you, we are currently at 3,706 students. And the projection, unfortunately, is for it to continue to drop over the next 10 years.
So I guess my question was like, what is that red trend line? I guess the red trend line, did you say it was less than 6%, but what is that what's the percentage in drop? Yeah, or the number of students, right? Because, with that line there's usually an equation for that line that tells the number of kids we're losing each year.
Yeah, it does. It really does. I could do the math for you.
And then we need to find the average number of students.
Yeah, I could do that. It's about 300 over 10 years.
It's about 300 over 10 years. So yeah, that's like 30 a year or so. If you were looking at this right now, we're at 3,100. So in 2034 to 35, you're looking at 3,300 students, about 370 students, or 370 students for over 10 years.
Yeah, so it's about 30 plus kids a year, somewhere there. Yep.
Okay. Thanks. Yeah. And I'll show you one other.
The slide that I shared with everyone earlier.
So this is our daily, the daily count that we get. I think it's just good to be seeing, oops, 9th, 10th, 11th, 12th grade, 9th, 10th, 11th, 12th grade. We're looking at numbers of 328, 348, 75, 358 with our all students from freshmen through senior classes and our incoming ones.
Oh, I'm not quite sure.
So again, you're observing a higher number of individuals exiting, fewer enrollments. We do know that we gain some students, particularly at first grade, because some families, homeschool or attend private school for kindergarten. And then in 9th grade, we also get Wildwood and new school students up. And with the new school, we do see some bumps, at those grade points, but it's still, at least the trajectory right now is to see a gradual decline.
Yep. All right. Thanks.
Any other questions?
Okay, if no further questions, then I'm going to turn it over to Mark for the financial update. Mark.
All right.
Wait a second. I need to think for a moment. Okay, so.
All right, so just to start things off, I do have one correction to make because for some reason I based my information on the May data, which, as it turns out, is actually the pre-final audit data. Also, I wanted to mention that we're having our final closing conference with our auditor this Friday, which is quite positive. This means we should be clearing that particular hurdle much earlier than we've managed in the past.
These balances and the outcomes we've observed are, for the most part, what we can expect to endure. There are, however, only two relatively minor adjustments or modifications within them.
Ironically, with the government shutdown, they couldn't issue a federal spending report. So no one could finalize their audit until the required support due months ago was issued, but it didn't work. So anyway, we'll likely have to present the audit later. All right, so essentially we're anticipating a specific fund balance. Now there's also a prior year adjustment that needs to be considered. The initial figure of $369 million that I mentioned earlier, I should clarify that it's not exactly a prior year adjustment in the way I phrased it. The actual book balance for that specific transfer is going to be approximately 3.8 million, or perhaps even a bit more than that, slightly exceeding 3.8 million. But we're carrying a figure this year into next year that'll be adjusted from the state school fund, since Hood River property taxes exceeded our forecast quite significantly. And we'll discuss that in a moment when we review this year's revenue update, and I'll show you how that connects. This should be the most accurate balance, and it's above the 5% revenue requirement that we have at the board level. And naturally, we still have our operating reserve for the year 2025, 2026.
In terms of
Basically, we'll have a supplemental budget. We'll likely present it in January to incorporate the new fund balance and expense changes. Remember, we must reallocate the $500,000 step in reserve, as it's currently a contingency line. And then we have changes regarding the initial cost adjustments that came about because of legislative changes and other related matters. We just need to finalize all of that, and then we'll present it. I do anticipate that even with this, we will still achieve a 5% ending fund balance for this current year, and I'll show you those specific figures in just a moment. I will say, in terms of our forecast 5, just at a very broad summary level. Sorry. Okay, so if you recall, forecast 5 was projecting a negative. It usually does that at the beginning of the year. That's reduced from 483 to 248 in terms of overrun on expenditures. I ran a comparison because I knew someone would ask what it looked like last year at this time. And in October 2024, it was a negative 1.45 million, which, as you recall, last year we had to do a fairly significant supplemental budget to bring in new payrolls and positions that weren't really in the original budget. And so the change to that original number and the budget that was set last year at this time was 1.45, and it ended up at 1.7 million, which was a slightly higher number, but I think it's a good sign because I think this year's forecast, the encumbrance, if you recall, last October was like the first encumbrance reports. That number popped up as an overrun, so we're not showing that year. We're not showing that this year. I think our payroll projection in terms of that
Payrolls and such.
Much better.
it's greatly improved with our new system. That's a good thing.
Michael, can I have a word, Michael?
Oh, I don't know if you want questions while you're going through this, but I just want to clarify the IG grants. I don't know what those acronyms in parentheses mean, though.
Oh, so this is about IG grants, right? IGA grants. It's funding. High school success. A student investment account. And those accounts, they had about, collectively, it was $150K in erosion. It was like $150,000 erosion this year. They changed the amounts. It was that they went and changed the amounts. So there'll be some revenue erosion that will happen because we'll have to move payroll from grants to the general fund to fund. Since we won't likely cut costs, probably cut expenditures from those. So they'll all be brought in, signed that supplemental.
They'll be in the supplemental.
But like I said, I anticipate the supplemental will end with a 5% ending fund balance. These grants don't come through as large amounts or totals, but
they're actually fairly sizable. I have them here.
Got the numbers?
But those things, I think the collective understanding of the situation together, they're almost
6 million?
6 million all.
So, sorry, little 16 million general fund.
They make up a fairly large portion.
So I think this is,
I always just I had misunderstood. I thought they were de minimis, maybe 150,000 or so. But so is that in looking ahead at the next budget cycle? Is there a way to more accurately forecast those grants?
Well, we would probably have to go ask the state that question. But they're the ones because they're the ones who determine grants, allocations, and revenue forecasts, and where the money is collected, where funds collect. And so I think that's excellent.
I think that's an excellent question.
I believe they've actually changed and built the Gregor system.
I think they changed those allocations 3 times since like the spring of this year. The spring, kept falling.
They kept going down. And if you recall, this year's budget, the revenue side was, everybody meeting under Oregon budget law, discussing April, May, and the legislature having come to a decision. The legislature decided cutting numbers repeatedly. It's been a very difficult year.
I'm amazed at how you put a budget together with that much uncertainty.
That's what I think.
Well, as a matter of fact, we have a dartboard.
No, just kidding. No, actually, it's good. We'll discuss it with the revenue update.
So I think it's a good question as to how that happens because it is important.
Because it's key.
I don't anticipate things becoming much more certain politically or otherwise in the next few years. So we must get good at it.
We need to be good with discomfort. Know the numbers.
Know the score.
Basically, very large variances.
At a high level for variances, it projects revenue to be 578,000 over budget. That's due to Hood River property tax-based growth.
Hood River tax. Over 100K. We expect to be about 101,000 over total.
And so our revenue forecast will have downs. We've had many ups and downs, but we'll probably end up right where we first projected. So,
I just said some. Talked a bit, some differences.
Variances like
we purchased our system earlier this year. We talked about that in prior months, and then I'll show how we allocate staffing, contingency into costs. So you see the projections. We did have early costs this year,
Raising them, boosting, but I think they'll drop back into line at the end.
but I think they'll drop back into line at the end. This slide, I just like to throw in.
it's from last month. There's no change. It's just our budget strategy, and we need to keep talking about everything we do, I think, right now.
Must be in terms of long-term.
Long-term sustainability, we've discussed this. I'm not going to spend a whole lot of time on it, except it becomes my sort of just philosophically how we're approaching it. In terms of the big budget, big risks and opportunities, I haven't changed this. Yet obviously the state had requested this. The proposed reductions, we'll talk about that.
In later slides.
There's a PERS increase, the one we talked about just last month. I'm going to update that projection because of some comments I got from OADVO. And then, talking about sort of these impacts to the general funding stream. Risks, I think we have to account for as we talk about this coming budget, and then setting ourselves up, as we've discussed, for the budget 2 years from now, which I think is a bigger deal.
It's a bigger deal in terms of the years 25 and 26.
Revenue.
I'm basically showing what was originally budgeted. Remember, this goes back to when they first put it together, February or March of this year. And then this is kind of where we're landing right now. There are some variations in here that will continue through the end of the year, but this provides an update with much of the information that we now have. First off, property taxes.
In Hood River County, I think it went up significantly, about 7.5%. This year, it's due to the expiration of some specific enterprise zones activity.
Unfortunately, because of the way the state school fund works, it doesn't matter because they just take that right back from our payments. So it doesn't matter. They just take that right back from our payments. So you're back at the state school fund formula for the 55 million, no matter how you slice it.
No matter what property levies.
We will have a slight uptick in the, as we've discussed regarding the ESD pass-through, we collected monies from prior years. That's being offset by some increases in our nursing costs.
In terms of that pass-through, it will be up a little bit. The forecast for the local option levy from the county
didn't go up as much in terms of those funds. I think part of that is because that's the last kind of tax money that gets pulled out first. So that number didn't go up quite the same, and I was probably aggressive on that when I forecasted it. I have left the equalization grant in here and not touched it. We'll have a further comment about that with the ODE slides in a couple slides. We did take a hit in terms of what I'll say are other grants here that are in the general fund that's really related to our recovery on high cost claims. If you recall, way back in March and April, we were very hopeful that we would get an increase in that sped cap. And yet it didn't happen. It didn't happen. We mitigated some of that by collecting some other money and doing some other things. We eased that by getting more money and other things, but that works against us. And then for other accounts, there's one big change I added that I didn't grasp in my first K-12 year. A big change in other accounts not seen in my first K-12 year. We never forecasted a bus replacement fund transfer, which comes directly from the state school fund formula. We actually transfer that money from the general fund to a bus replacement fund. So it's only used for bus replacement. We've never really budgeted that, but it needs to come out of our general fund revenue. So I added that in as a reduction in revenue. Now down here is where this prior year state school fund adjustment comes in. Because the taxes were higher last year at the end of the day than what was forecasted when they do the May adjustment based on the audited results that we turn in from this last year, they'll take that money back out. That's one reason why the beginning balance, if you look here, is $3,868 million, which is what I'm figuring as a number to bring in. That number's a lot higher than what I'm calling our true fund balance, because this is really going to be carved back into the net total of that. And so if we take all these numbers and net them out, you end up with $101,000 difference on $67 million, which is basically where you started from.
I'd say that's a pretty decent outcome considering the prevailing uncertainty.
We've run through our safeguards on many of our large grants to ensure there's no bleed over. I think we're in good shape. So I don't think we should have any surprises on those. I'll pause, but we continue to work through them. Pause as we've seen some progress through the year, Now, if you notice, the economic report that came out yesterday was a little more positive than the one from the quarter before that. I did put a quote in here, but again, this is the first quote I had. The first quote from the Statesman Journal. Basically, where they had originally projected a very high ending fund balance, that funding balance would actually run into a shortfall. It's now sort of shrunk. And so now we have, I guess, less money, I suppose, which is a good thing. In that process, ODE was required to prepare and present budget reduction scenarios based on 2.5% and 5% reductions at the state level. I've included the comment from their proposal post, which was legislatively that's requested as a standard practice. However, none of that gets decided until the legislature actually convenes in February. I will point out that the programs that are here that they slated to cut give us some indication of what would happen in the event there does need to be a cut. In our areas, the first was the elimination of the Education Advancement Council, which in terms of dollars maybe doesn't impact this, but certainly in terms of services, it does for the CRIN. And some of our CTE programs, and they had some real cuts to youth engagement. This is an area that concerned me quite a bit because I wouldn't have expected them to do that, especially since voters used it to approve local option levies. So it's something we are watching
and I should say actively communicating on through our partners with.
Hey, Mark, could you just clarify that for me? That's a really significant amount, this local option equalization. Am I understanding correctly what you're explaining here? Is this amount part of either the 2.5% or the 5% reduction, or is it a completely separate recommendation regardless?
Yeah, it is actually a part of the 2.5% reduction. It was, the primary objective was to eliminate specific exceptions from the comprehensive calculation of the state's overall school funding. Local option equalization, I can't recall the others. There's a whole raft of them, and they wanted to eliminate those specific carve-outs. So in doing that, it doesn't decrease the state school fund, but it lessens the pressure, the actual numbers that come from the pot of money available for it. And so that's precisely how they were able to accomplish that particular objective. And so they then proceeded to incorporate those significant changes directly into their official proposals, which I must confess genuinely surprised me. And once again, I found myself,
If the revenue forecast is looking more positive, then there's still a lot of uncertainty regarding that specific 750, isn't there?
Correct.
Right.
Yes, that's correct. I think what truly surprised me was and it's something we should definitely keep in mind for the future.
Keep in mind.
Because when you consider ODE, what they thought they were doing was proposing that their cuts would have the least amount of impact on the basic student education experience.
ODE believe their cuts would least affect students.
Correct. And so in their mind, that local option equalization grant is like extra money. But the districts that get it certainly don't view it that way. And I think the taxpayers who paid in and agreed to take those funds didn't agree to it that way. And so it's a very big deal. And it's Chrissy.
Thank you.
And we have, in fact, explicitly included this within the official wording of our bond agreement. And so from my perspective, this particular point is without question truly a non-negotiable item, because to do otherwise would essentially force us to renege on the promises we made to our community. That they would get if they voted for this levy. So I'm waiting to see what happens, but I'm ready to fight this one hard.
Exactly.
I think it's probably on every ballot for local option equalization because it's one of the biggest reasons people vote for it. It's the equivalent of a really awesome grant for a capital project.
It's just a state match. So anyway, I was just about to say, yes, Ted?
Yeah, I agree with Chrissy. At budget meetings, when we discuss passing or not passing the bond, for years, that's certainly come up. We talk about how it's really important for us to do this because we received this equalization grant from ODE. And Chrissy and I would feel bad if we said something we didn't always necessarily print. So, but yeah, I'm totally with her on that.
Well, and also it hurts us in more ways than that because that's a trust issue. So when we go out for anything again and say, hey, we're going to do this, where's that leave us? So it's not good.
That's why it truly surprised me that it actually made the list. And I think it's something we really need to keep an eye on because in their view, it's $4 million in carve out money.
Well, it is a fundamental question of, that particular grant was specifically established to actively promote districts to pass these local option levies. And I feel there's a very clear understanding, a sort of contract that was established in my mind right there. So anyway.
So yes, the revenue forecast was better. There'll be some COSA meetings and things and ASBO updates as we go along, and we'll keep everybody informed. But obviously all of those recommendations will have to go through the legislature to be enacted. But that's sort of a very brief synopsis of what their recommendations meant to us for what it's worth. Moving on to PERS, we received a brief update from the OASBO Fall Conference. I've included a slide, if you recall. I'll refer back to the projection, but we discussed 3 levels of impact starting in 2027 on our PERS rate. The first is just the base employer rate, which is what this is about. The second is the expiration of the site account. And third, the removal of this legislative reduction that occurred because they put money into the pot for this biennium.
and it goes away. That's the 1.6868%. Now, according to that update, the anticipated impact rate change was that the employer rate would be almost the same for school districts going into the next biennium, which is good. So I've gone ahead and updated our financial projection, now reflecting a slightly lower increase. However, this updated figure still doesn't fully account for the separate side account, which is 5.54%, nor the PERS reduction of 1.68%. But all things considered, that's still somewhat positive news for us. For anyone who might be curious, the unfunded liability, which has consistently been reported around $29 billion, is in fact still $29 billion. So those specific figures will be updated in due course. We probably won't get our final rates until December of next year to cover the following year. So we'll build them into these projections. I also got a question. Tedwin is a gold star because he asked me questions about my calculations for the school fund project, which I had messed up with the biennial
Twice yearly
the calculation. So I corrected that error. So
Fixed, then bad news. Bad news then.
that number dropped slightly, but the good news, the current number also dropped, so they offset each other.
to balance them out.
But we're still back to this point. So this,
A situation where looking at these numbers,
Just these are
in sum, it's the start.
still at the start, 2027, 28, potentially a major reduction.
And so as we go into this cycle, once again, we'll probably we'll check that,
How this plays out. If we're going to make cuts,
If we're cutting,
make them early.
present, it's easier to spend $2 million than just $1 million.
Spread of two, not one, than it is to do it all at once.
Than it is to do it all at once. But that's kind of the updated number and what that looked like.
And what that looked like. So you can see here, I zeroed out that advisory rate change we were looking at before.
In terms of the possibility of new side account bonds, this slide was presented. The problem is, and we talked about it before, because the current borrowing rate is 5.25%. It still just doesn't really make much sense. However, there's been some discussion of
We've been discussing the idea of having
Eco Northwest will be maintaining a series of assessments starting in 2020.
Assessments from 2026.
All school districts would split funds. An economic assessment is required, updated every 6 months. So we can just see what happens with sort of all interest rates, which have come down slightly.
which dropped slightly.
And so, yes,
Just have to see where that
we'll
goes.
just see where it goes, but that lets us, without this assessment.
None.
Fiscal review. You can't even start discussing a side account bond.
And that keeps us
And so that keeps that as an available option for all the districts.
Keeps it an option for districts.
Now, in terms of this enrollment,
I wanted to include this chart. This is the flow analytics chart. You see,
I'd like to point out, I wanted to say, because I thought this actually made sense. It made sense to me. What if we were to consider it in 5-year segments?
what's changed in 5 years? 5 years? 10-year change? Change in 10 years?
Because this 5-year birth data is established, and we know it.
The 10-year change is a lot more speculative.
But
when discussing numbers,
What does it mean if we just extrapolate? Because payrolls are the biggest number for our 544 employees.
Payroll's biggest.
That's the kind of employee count we're referring to at every single level.
That's substantial.
This is significant and often thought of negatively, like declining enrollments. Enrollments are declining, which is negative. But one thing I went back to see,
I checked.
If you test Hood River County State School District versus the
test Hood River against the state.
they're quite alike then.
They're similar over time, often.
In most cases, Hood River's decline worsened for years.
Hood River declined for years.
Both fall, but they're both falling around this sort of 690% for the last 5 years.
The key then is, the point is, if we do have to go through a reduction scenario because of financial impacts this biennium, our student demand is also declining. So as we run through these scenarios and understand what the future looks like, we can keep that in mind as well.
it's not just facilities, but it's the overall budget that really impacts. And so it creeps up on us because when you're talking 0.8% a month, 0.8% a year over several years, but those 1% add up over time and they're pretty significant.
I wanted to bring to everyone's attention another significant development that you'll soon be hearing more about. The Oregon Department of Education is proposing a change to PBAM. PBAM is essentially the accounting manual specifically for school districts. Our current structure involves funds, function, object, and area. And then there's a sub area along with some other components. They've added a considerable number of details, which they state is to ensure transparency and accountability. But you'll observe that some of these elements, which pertain to every single expense, payroll, or any other transaction, now necessitate adding the program, grade level, curriculum, and the ODE accountability measure list to them, which, as you can certainly imagine, represents a significant amount of data. Many business managers were very unhappy about this change because there were some changes here with revenue and grant resources that are very different from what it was. And so it's subject to ongoing discussion and refinement. They did push it off. It was originally set for July 1st next year, but they postponed it for another year. The problem is when you change the chart of accounts this significantly, I always tell people the two biggest accounting changes any organization can make are changing the accounting system itself or changing the chart of accounts. Both cause about the same amount of heartache. Changing the accounting system we all experienced last year, and we know the disruption and difficulty it caused. The issue with altering the chart of accounts is that every template, every process for coding payroll or getting tasks done gets completely upended. You have to redo everything. This is a major issue. We're trying to participate in a positive sense. OASPO has sort of taken the stand and tried to relate that this change will happen. It's just a function of what it will look like and how to help with that process. And so they've asked for recommendations. We've given them our recommendations, things like that. So we'll see where it goes. I just want people thinking about that for the future because there's some opportunity here. For example, when we discuss accountability measures, we should try to weave them into our normal dialogue. You know, how does that relate to our current strategic planning goals, and do those measures cross over? What do they look like, and how would that tie in then to all of this other financial coding and things like that? So anyway, just keep that in mind. This is the sort of raw forecast 5 number. I'll skip this particular slide and instead I'll show you what I've implemented. I've incorporated these projected revenue adjustments into our financial forecast. These represent the anticipated shifts we expect to see, which are then factored in to illustrate the final outcome of that forecast. Ultimately, this results in a $100,000 change. I then reallocated, as I did last year or last month, $500,000 from contingency into here. And you can see that at the end of the day, we're still projecting fairly favorably, end up with our 5% ending fund balance. It is sort of buoyed by forecast 5, thinking that the expenses are higher. I didn't adjust those back down, but that's why it gives me, I think, pretty good certainty about where these numbers are going to fall at the end of the year, barring any significant changes and unexpected ones. So that's what we have for the general fund. Really, the other funds are essentially maintaining the same status as we previously had. Regarding the grant funds, you'll clearly see an uptick in both expenses and billing. A big chunk of that is the summer school grant and all the expenses that came through, which I think was about $500,000. You'll observe a rise in the grant money we're receiving. We also have new expenses coming in now as we're beginning to pay for and take delivery of our electric buses. So you'll definitely see that particular expense appear quite significantly in the coming months. Regarding debt service, there isn't much change to report. Basically, the debt service and the capital expenditure portion really pick up quite significantly once we start to receive the property tax receipts that come in. We haven't seen a great deal of activity concerning the capital project funds, and therefore the situation remains quite stable. I will not be spending a significant amount of time on these additional reports unless any of you have specific questions. I want to draw your attention to what's visible here, specifically around October. You'll clearly observe a significant increase
You do see some quite substantial changes. I think these are relative to reductions that occurred in our workforce, which we're aware of. And you can certainly see what we had anticipated, that the demand for classified positions is steadily increasing. We've identified some of these as truly critical roles, especially concerning transportation, and also within our special education departments and similar fields. So if we consider our employee base and where some of our critical issues are pending, we're trying to ensure we can support those areas and recruit and retain staff. I think you'll see that reflected in these figures. This is just the variance summary, which I included. Are there any questions?
Going back to this, is ODE changing all the funds we track, including accountability? Where exactly is this particular idea coming from? Is it that they're simply observing other states doing that, and so we're just following what others are doing? Or because otherwise it truly sounds like a tremendous amount of effort and difficulty at a time when there's less money available. So what would be the justification?
Make someone do this? Well, yes. I mean, you're hearing this from what is obviously an accountability initiative at the state level. They've also mentioned that some of this is connected to grant reporting at the federal level. Ultimately, a third issue was that every district sends different applications for various grants and budgeting numbers. We upload this data to their system, and then they ask us to recalculate the same information we already provided.
And so the thinking is, well, we can just standardize it. I think they're overestimating what they're going to get out of making something very complex. I think from my background in operational and management accounting, consistency matters more than detail. You can ask for all the detail you want, but if it's not consistent and not presented consistently, you really don't gain anything more from it. It's just more information to go through. So I think that's a question. I think it's a question now being discussed, how it basically gets to, I mean, it's not doubling the information, but it's pretty close. So
No, it's all right. Rich was just a little bit quicker than I was. So can you go to the licensed salary and classified salary again? Because I'm used to seeing like the licensed salary, like our portion of the pie there just being way bigger. So is it just like July through October? Is that why?
I think that's part of it, because when you look at it, I think the other aspect is, and I mean, I probably need to reconcile this a little bit. So this particular allocation comes from our general operating fund. We've recently brought on board a significant number of licensed personnel working within our SIA initiatives, high school success programs, and also our ELL outcomes efforts. I'll likely need to request that they adjust the programming for this, ensuring it incorporates some of those specific grants, because I anticipate that you'll observe that particular figure increasing quite substantially.
So when you say you feel like many people are on grant funded license salaries, in your head, and I'm not asking you to be right, but in your head, what % of us do you think aren't funded by the general fund?
You know, I can certainly find that answer for you. I mean,
He's seeking a.
Let's see, total head count was 544, and we have 446 in the general fund, and you take out nutrition. I mean,
No, I mean, there's probably, well, I mean, among all the different classifications of all the types, probably
60, not nutrition.
60. Also,
There are probably 50 or 60 FTEs within those grants, and it's distributed among some licensed staff and a bit of
some
admin work.
licensed, a little bit of admin.
Some classifieds, and it's mostly licensed and classified positions.
Okay. So maybe 20 or 30 licensed positions are coming out of there.
Yeah, I'm speaking very roughly.
Right. It's an answer on my list of things, and I'll calculate it over the next couple of weeks to understand it, because I think those grants are really almost like
Those grants are practically the general
Same
fund,
thing.
no difference.
Our way, how we operate, right? You can't separate them. A reduction simply impacts the organization.
That reduction is for the organization. Okay, thanks.
Okay, thanks.
Questions?
Any more queries?
Short.
I'm better this year. I feel better this year than I did last year.
Rich.
So the only other thing is, I don't know if it's probably not premature for this, but this idea that they're proposing to possibly take away our equalization.
They're proposing to take away our equalization grant. Is there?
Is
Is it worth it?
Is it worth it? Should someone start writing and advocating for it?
We'll champion this.
Or getting legal help with other districts in the same situation as us, because it does seem to me like,
Because it seems to me, I personally was at the schools.
I was at schools.
We urged votes for this to get the equalization grant.
Vote for this, get the grant.
That was a definite part of the pitch.
That was a definite part of the pitch that helped sell it.
And I don't know how you.
I don't know how, but it seems like there are many questions about it.
We'll do that. I think we will be discussing that. Even if there isn't a reduction, the fact that they put it on the list, I think, is significant.
Yes, I understand. I completely get what you mean.
I think that regardless of what the revenue forecast actually came in, this week, which was lower than, it was actually a much better revenue forecast than what we were originally expecting. However, despite all of that, I still believe we must advocate with our elected legislators and make it known that we do not consider that to be a truly valid option. This is especially true considering the fact that we communicated that as an incentive to our general public at the time when the vote was taking place. Therefore, I believe we must engage in some work with our legislators and also involve our community in that important communication.
When we've discussed this with OSBA, I've strongly advocated that we must ensure this becomes OSBA's core message to the school boards, use that, as a key benefit of levies. And once more, the fact that we included this as part of the narrative on our official bill, our formal statement, it's simply, you cannot, I truly don't see how one could possibly retract that. So, yes, we are absolutely already beginning that very important conversation. You can be sure of that.
Thanks.
Thank you so much.
Did I hear Mark right, Chrissy, that we're in the minority, or are there only a few districts that get that equalization grant? So will that make it harder for OSBA to advocate, because you're only really advocating for a few districts as opposed to everybody?
Well, I think I think, yes, Ted, there are only a few districts, but that's because not very many districts can pass levies. But if you take that incentive away, you're just making it even harder for districts to pass levies. So, we are, but that's only because, I think everybody would certainly like to have a levy. It's essentially free money in your pocket. So yes, you're absolutely right. But it's also taking away a really important part of, being able to actively work with your local community to give yourself some additional funds.
Our district is just one of maybe 4 or 5 school districts where this particular idea is currently being, put forward. However, an argument that I believe we could also make is, why are we only cherry picking the local equalization grant when it comes to levies? Why aren't we applying the same approach for the bond incentive program as well? And for the awesome grant, why aren't we considering that in the same way?
Ted, I believe that OSBA's approach, the specific angle we're taking on these two matters, is quite straightforward. We have, in fact, made it abundantly clear that our primary objective is to ensure local control. We want our school boards to be able to have local control in our districts, and that's been a very strong advocacy position for OSBA. And so, when you do things like that, you're taking away our ability to maintain some level of local control. So this isn't just about one specific issue that might affect a few districts, but it's really about the broader concept of, removing our ability to raise necessary funds within our own local district, or
other things, and crucially the trust component, the fact that we clearly stated we'd be receiving this equalization grant. I think that's the really big thing that we risk here is losing some good faith with the community, and that we made a commitment that we now need the state to fully follow through on.
And I'll say, yes, I mean, the state truly loses my good faith with me. If you've told me that these are funds that are going to be available if I go out and pound the pavement to get a levy passed, and then you just come and take it away, you lose my faith in you as, our legislature and our government. And that's not good for somebody who, as an elected official in your state, to have that feeling. So there's a lot of room to really make a strong case, I think.
That's exactly right.
That's all I really have.